In this video, I'm going to show you how you as a Kiwi can own a part of your favorite companies, especially when they're in the US. So make sure you stick to the end. Hey guys, Stan here and welcome to my perspective. If it's your first time on this channel and you want to learn more about investing in the stock market and become more financially literate, consider subscribing to my channel and remember to hit that bell so you can be notified when a new video comes out. And don't forget to give a thumbs up if you enjoy this video, as it will help other Kiwis on the platform see this video as well. For those that have lived in New Zealand for a while would know that there aren't many options available when it comes to investing in the US stock market. Yes, you've got the NZX 50, the ASX 200, maybe some overseas ETFs, but you got to know there's a much bigger stock market world out there. This is a chart showing the percentage that each major stock market has of the world's total stock capitalization. There you have the Australian stock market taking up only around 1.8%. So just imagine how small the New Zealand market really is. And if you're a fan of technology, you'll realize how many different companies can be interconnected. Just take the iPhone for example. The first company that'll come to mind is no doubt Apple. But think about the components of the iPhone. Starting from the outside, you've got the front camera, the rear camera, the casing, the display. Then for the inside, you've got the audio, the battery, the processor, the various chips in there. How many suppliers are involved in making just one product? And this is only one of Apple's many products. Now that really puts things into perspective. My point is, if you see Apple as the only company related to the iPhone, then you're missing out on huge opportunities. Likewise, if you see New Zealand as the only stock market you ever want to invest in, then you're really missing out. Anyhow, I'll go over some of the most popular platforms used in New Zealand that can help you invest in the US. I'll briefly go over what they offer and what their fee structures are like. Then I'll introduce some foreign brokers as well, and then do a similar overview so you can decide which one works best for you. So first up is Hatch. Hatch is a Kiwi wealth platform that gives Kiwis access to over 2,900 US listed companies and over 500 ETFs. Kiwi Wealth is owned by Kiwi Bank's parent, Kiwi Group Holdings Limited, so it is a 100% New Zealand owned and operated entity. They are partnered with Drive Wealth, which is a US third-party provider of their underlying investment infrastructure. Hatch only offers US listed shares though, so if you have a New Zealand portfolio, you won't be able to aggregate it under this platform. The main advantage that Hatch offers is the ability to buy fractional shares. This is very handy when you want to invest in, say, Amazon, Tesla, Google, which have very expensive share prices. For dividend paying shares, you will still receive them based on the fraction you own. The caveat with this is that you won't get any voting rights with your fractional shares, unless your fractional purchases have accumulated to be over one share. In that case, your voting right is proportional to the number of whole shares you have. Pricing is pretty transparent. You pay a 0.5% fee every time you exchange your New Zealand dollars to US dollars, and likewise when you exchange back for withdrawals. And for every order you will be charged a flat fee of $3 USD up to 300 shares. There are incremental increases of 1 cent per share onwards. So for orders of 301 shares, you will get charged a fee of $3.01, and for 302 shares, $3.02, so on and so forth. As you're buying shares in the US, you will be required to fill out a W-8BEN tax form, and Hatch will take care of this for you for an initial fee of $1.50 and 50 cents yearly fee for tax filing purposes. The second platform is Sharesies, which is probably the most popular share trading platform for the average investor in New Zealand right now. At the moment though, they don't offer access to any of the US listed companies, but you are able to invest in a few US funds. They are in the process of making US shares more accessible, so definitely keep an eye out for this. They're planning to offer more than 2,500 US listed companies and more than 900 ETFs. You can subscribe to the email updates on how they're progressing if you're interested. These US funds on offer are basically managed by Smartshares, a member of the NZX group. There are currently only 6 US funds offered on Sharesies by Smartshares. These 6 funds are ETFs offered in the US but have essentially been repackaged by Smartshares so Kiwis can access them much easier. Sharesies have a monthly subscription fee if your portfolio is over 50 New Zealand dollars. From there, you will be charged $1.50 every month for value up to $3,000 and $3 every month for over $3,000. On top of that, there is also a transaction fee for buying and selling companies on Sharesies. So they take 0.5% as commission when you make a trade up to $3,000. And for trades over $3,000, the first $3,000 would be at 0.5% and the remaining would be charged at 0.1%. But the good thing is you don't need to worry about exchange rates, as these are all based in New Zealand dollars. Similar to Hatch, Sharesies also provide the option of trading fractional shares. For ETFs, no transaction fees are charged, but one thing you need to be careful about investing in these ETFs is that you will be charged a yearly management fee. This fee is usually shown at the very end of the details section, and it's basically a fee charged for managing that fund. If you look at the funds in more detail though, you'll see that SmartShares charge a much higher management fee compared to what is being charged for the actual underlying ETF. For example, the SmartShares US Large Value ETF, a 0.51% fee is charged, but the actual ETF, which has the ticker symbol VTV by Vanguard, charges only 0.04%. This is due to the additional costs related to bringing that US domiciled ETF to New Zealand. So if you don't want to pay this difference in cost, then you should consider using other brokers that offer direct access to the underlying ETF. And that means when Sharesies do offer US listed ETFs, there's a pretty good chance that you'll be able to access the Vanguard ETF directly. Currently, Sharesies do not require you to fill out an overseas tax form, as you're really just buying products offered in New Zealand. But in the near future, when they do offer US shares, you may be required to fill out that form. And also just make sure you pay attention to any changes to the fee structure as well. There are other local platforms, but I won't be going over them in detail for this video, as most of them only really offer US funds as opposed to individual company shares, and they don't really have the intention to at this point in time. The closest is probably ASB Securities, but appears to be that you can only trade in overseas markets, excluding Australia, via phone, and the phone brokerage rates aren't exactly economical. Okay, let's move on to foreign brokers. The first one I want to talk about is closer to New Zealand, and it's called Stake. It is an Australian-based platform which offers more than 3,500 US stocks and ETFs. They're also partnered with Drive Wealth, which is the same partner that Hatch uses, as discussed earlier. Stake also comes with a mobile app, which is a plus. Compared to Hatch and Sharesies, you'd have to log in via a browser. The main advantage with Stake is the zero commission trading, which is quite popular among foreign brokers, so you basically pay no additional fees when making trades. And they also offer fractional shares, which is great. However, there's also a monthly subscription structure. You've got the starter pack, unlimited pack, and the black pack. Right now they're doing a special, so when you sign up today, you'll have the unlimited pack for free until next January, and unless you pay the monthly fee after that, you will be switched back to the starter pack. If you have over $30,000, then you'll have the black pack for free until next January. While I do think for most people the starter pack is probably sufficient, as you aren't likely to be trading on a daily basis, and if you're a long-term investor where your investment horizon is a few years out, you really only need market orders, as you're not too worried about whether you buy shares at $50 or $49. In terms of funding your account, the default method is using online banking via Poly. Stake charges a 1% exchange rate fee for every deposit and withdrawal, and for your first time, Stake will also charge a $5 fee for the US non-resident tax form. The other fee that you need to be careful of is the express or regular transfer fee. The default option is the express option, which is 0.5%, and you'll be able to see your funds just after a few hours. So at the time of the screenshot, it was about 12 AM on Friday in New York, and as you can see, it would be in your account by 9 AM on the day, just before the market opens. For regular, it will take at least a day. If you don't want to use Poly, then you can use your bank or another FX remitter to make direct transfers. Now, there are also US brokers that you can use, and one of the best and most well-known brokers that is fairly easy for foreigners to use is TD Ameritrade. It was named the best overall broker in the 2020 online broker review by stockbrokers.com for 2 years straight now. It has a very comprehensive platform, which includes a lot of educational resources, retirement planning information, and access to third-party research, etc. It caters for a wide range of investors, from beginners to serious traders. You can make trades via your mobile devices, via the web, or if you're a serious trader, then you may consider downloading their Thinkorswim desktop application, which provides tools for analyses and strategy testing. Unsurprisingly, for stocks listed on the US exchange, you get commission-free trading, and they also have a long list of commission-free ETFs which you can invest in, and there are many other products that you can check out, such as futures, options, bonds, etc. Now, for funding the account, these are basically via international wire transfers between the broker's bank and your bank. These usually take around a couple of business days to clear. TD Ameritrade doesn't charge you a fee for deposits, but depending on who you bank with in New Zealand, these fees can vary for wire transfers. On top of that, you have the exchange rate fees to consider as well. The downside with TD Ameritrade is that when you make withdrawals, they charge a flat fee of $25 US. Alright, so we've gone over pretty quickly some of the platforms currently available to New Zealand that allow you to invest in shares and funds in the US. So let's do a quick recap. For fractional shares, all apart from TD Ameritrade offer fractional shares. Fractional share trading has definitely become a lot more popular, enabling small retail investors to invest in expensive stocks which they couldn't afford to before. But it all depends on what your goal is when you own a part of a company. Some people don't like fractional shares because they enjoy being a real owner of the company and the voting rights that come with that ownership, but having that option is definitely convenient. Second is the subscription fee. Hatch and TD Ameritrade don't charge a monthly subscription. Sharesies charge up to $3 New Zealand dollars a month if your portfolio is over $3,000, otherwise $1.50 a month. Stake offer 3 different types of packages: the starters pack, which is free, the unlimited pack, which is $9 US, and black pack, which is $19, which offers a lot more if you're more serious about your trading. Third is commissions. Stake and TD Ameritrade both offer commission-free trading. Hatch offers $3 US flat fee for trades involving 300 shares or less, and 1 cent for every additional share thereafter. Sharesies offer a regressive structure, so for the first $3,000, a 0.5% fee is charged. For every dollar after that, it's charged at 0.1%, so the commission rate decreases as the amount increases. Next is exchange rate fees. Sharesies does all transactions in New Zealand dollars, so no FX fee. With Hatch, you're charged 0.5% every time you exchange, deposit, and withdrawals. With Stake, this is 1%. With TD Ameritrade, this will vary with the bank you use, but banks are usually much more expensive. Last but not least, other fees that you need to be aware of are the tax form fees, which both Hatch and Stake charge. At this point, we don't know about Sharesies yet, but they could charge this fee when they start offering US shares. For TD, you'll need to fill out the form yourself, so there's no additional fee. So it all depends on what works best for you. It'll depend on how often you plan to deposit, withdraw funds into and from your account, what kind of investor you want to be, whether you're an investor who invests once a year or you want to invest periodically every month, every fortnight, etc. Or you want to be a more active investor and you want access to analyst resources, research, etc. Then you may want to consider a bigger platform. I hope this overview has helped answer some of the questions you may have about investing in the US from New Zealand. Any questions, feel free to get in touch with me via LinkedIn or email. And if you want to see more of these videos, subscribe to the channel and you'll get notified of the next video. Otherwise, have an awesome day and I'll see you next time.